It's another day, guys. So today, we want us to learn about something different. See, there's a trade of today, which was open during the New York session, and it was good there. So let's talk about imbalance. Yeah, today I just want to touch a little bit on imbalance, and I'll use the Euro USD, okay, to explain this. What is imbalance? How do I identify imbalance on the market? What is the importance of it? What are the characteristics of an imbalance in the price? Now, when we talk of imbalance, first of all, it is a space, right? It's a space between three candles. For example, if you have your candles there, allow me to take some few minutes to create something here. So, in a whatever the direction, whether it's bullish or bearish, an imbalance is a space between three candles. This means that if you have candles there, the easiest way to identify imbalance, if the price is bullish, mark the high of the first candle, right? Then mark the low of the third candle. Skip the second candle. This is the first one. This is the second. We skip, then we mark the low of the third. Any space, I repeat, any space that is in between. That's what we call fair value gap. Okay, that's what we call fair value gap. But the moment you see or you come across price whereby we find that the wicks that have intercepted each other, that if you draw a line from the first high of the first candle across to your right and it touches the low of the third candle, this third candle, then it means there's no imbalance there. And this happens both to bullish and bearish market structure. So this means that every time market moves, it will always create an imbalance. For example, on a bearish move, just have these candles here. Okay, this is the easiest way to identify. There, so we can have three candles. Don't mind, it might not be straight, but at least, at least. Okay, so right here, we have something like that. So for a bearish move, you want to mark the high, not the high, sorry, apologize. The low of the first candle. For a bearish move, this low, like that. And the high of the third candle, this is the first, this is the second, and this is the third, like that. Any space, I repeat, any space in between. That's your fair value gap. So let's go to the market and try to look at these levels there. Right, so I delete everything here to clear the chart. I don't have to, right? This is a bullish move. If we start from, let's say that we start from this low and we want to find imbalance as the price keeps moving to the upside. How do you find imbalance? We'll zoom in. I've taken this low because remember, I've chosen this low because of the graph of liquidity here, right? Just liquidity graph around that zone. So look at this. This is the first candle that swept liquidity. If we mark the high of it, allow me to use this straight line, the high, and the low of the third candle. Where's the third candle? If this is our first candle, this is our second, then the third candle is it. This is the first, second, and this is the third candle. Like that. You can actually see, if I zoom a little bit, you'll notice you had this space. This was your imbalance. That was later filled by price. You can see price went up and returned to fill this level. After here, price proceeded to the upside. So this is an imbalance that has been filled. This one. There. Again, when you mark the high of this candle, this being our candle of interest, we extend to the right and change the color to blue. And this become our first candle. Then our second candle is here. Where's our third candle? The third candle is here. This is an inside candle. We don't count. This one is inside candle. It must break above the second candle. So this is the first. Second, you don't count the third. The low is here. Where's your imbalance? Your imbalance is from this high to here. That's your fair value gap. What is here? You can see price returned to fill this value, fair value gap here, then proceeded to the upside. Now, where's our next candle? This is because it has swept this previous green candle. So I'm going to mark the high of this candle and extend it to the right. Then the second candle, where is it? This is the second candle. You don't count the one. The third candle to break where? Break above the second candle. So this one I'll not count. I'll prefer to go with this one. I'll mark the low of this candle. And definitely you can see right now, you don't have any imbalance here. There's no space. If you check here, there's no space left. But here, if you see, if you remove this candle, you'll see space here. Here we can see there's a space here, right? We proceed again. If we mark this candle as our candle of interest, to mark the high of it and to extend to the right, to the future, like that. And this is a second candle, then there's a third. You see the third, once it returns and it touches the high of the first candle, this is the first, this is our second, and this is the third. The moment price returns and it touches that level, what does it mean? There's no imbalance, everything is filled. We proceed. If you mark this high, right, as a candle of interest, and you skip this second candle and you mark the high of the third, definitely you can look at this and you can see there's an imbalance here. There's a space that is left. That's how you identify fair value gap. There. So we can proceed again. Where's the next candle? This one. We can, if you mark the high of the first candle, for example, this one, and where's the second? The second candle is here. Where's the third? The third candle must break above the second, so you don't count this one and this one and this is the third. That. Where is our imbalance? Our imbalance from this level to here. That's your imbalance. And that is for a bullish move. Now let's talk of a bearish structure. Right? Let's talk of a bearish structure. On a bearish structure, let's start from where? Let's say that we're starting from, okay, here. Now, from there, if you want to find the imbalance, we said you mark the low of the first candle for a bearish move. This being the first candle, sorry. I'm going to zoom a little bit more so that you can see it. If this is the place, you mark the low of the first candle. This is the first candle. You mark the low of it, right? Extend to the right. And the high of the third candle, this is the second and this is the third. Extend to the right. You can see this was your imbalance and the price came back to fill the level. So the level is already filled. Now you can see the price proceeded the downside here, kept pushing to the downside. So here everything is filled. You don't have any imbalance. Everything is mitigated except here. This is the candle of interest. You mark here and extend to the future, and you skip this candle and here. There's your imbalance. Your imbalance is here. Right? There's your imbalance. And this price coming back here, remember, this is just a down close candle, this one, which acts as a resistant, which gives you a bearish order block, all right? It pushes the price to the downside. So that's how we look at it. And the order block itself, bearish order block originates from this, then drops. So all of this moves an order block, this one. This one is an order block. But when you refine it, That's when you come up with something small, but all of this is an order block there. So where's the next imbalance? You can see when the price started dropping, mark the high, this first candle. All of these candles are inside the candles. I'll prepare a topic for that. Then this is the second candle, don't count, and the third candle is here. Yeah. Any space in between is your fair value gap. Now we can see all these levels are here. If I just draw a line like that, you can definitely see. I'm just, this is the low of this candle. The second is here, the third is here. I'm sure you can see a very small space there. That's an imbalance. So guys, allow me to use another example. The last one before I take you for another ride. So this being the last candle, because it grabbed some liquidity there, you mark the low of it as the first candle and the high of the third candle, this one here. What's the imbalance? Balance is here. Now, when you you talk of an order block, and the characteristics of an order block is a candle that sweeps liquidity, must lead to a break of structure, must have imbalance. Imbalance is here. So definitely this becomes your automatic order block to hold the price to the downside. Yeah. Yes. So let's go back here and talk about this GU, GU, the pair that I happened to sell. I bought this pair. I did not sell, but I bought this pair. Now here, what happened here? This structure, when I was buying this move, I bought according to time. In fact, in the morning, I lost some around $22 because I woke up and I don't know where my mind was. And I saw this buy here. But again, instead of placing a buy, I ended up like opening a sell limit. Then, damn it, I lost it here. But it's good. It's okay. So when the price opens, you can see there's a run of liquidity on this lows here. Took out this low and price started rallying to the upside. So during the New York, I was able to catch this move here. So allow me just to open a different broker so that I can give you a clear picture of how I took my trades there. Because remember, a few days ago, we are selling, and this was a good trade. Tapped on this high time frame, imbalance. If I take you for a 4-hour time frame, you'll see there's an imbalance here. And this imbalance, in fact, is a daily imbalance. You can see this is a daily imbalance. Price taps here and expect a push to the upside, not for a long time. This buys are for a short time, because if we fill this gap here, sorry, there's a gap here that we need to fill. Once we fill that gap, I'm still looking forward for a sell. Yeah, still looking forward for a sell. So I will go back to the 15-minute time frame and talk of what are we expecting here. So remember, market's about time. You need to understand the sessions. You need to understand, like what we learn in our community is that we master time. You need to understand time, because market moves with time. Market does not just move like anyhow. Like right now, it's around 1:14 a.m. late night. So price, you can see it's not moving. There's no volume. There's no session that is on right now. So what happened here? You need to understand this opening time frames of these sessions here. You need to understand the time New York session opens, the time London sessions opens. Then you add that to your strategy, and it will help you to catch a good move. Example, just to cut across the symbol information. But if you're keen enough and careful, you can go back test and try, and it will help you. First of all, you need to understand that the Asian session, right? The Asian sessions opens the New York time opens at 8 p.m. New York time. So you need to convert your time, the international time, to your local time to understand. 8 p.m. to midnight. All right. Then London sessions comes in at 1 a.m. Remember, the New York close at midnight. That's around 12, right? London session killer zone. The volume starts coming in, from 1 a.m. London session, you start looking for an entry up to 5 a.m. New York time. Remember, I'm emphasizing New York time, not your local time. Then the New York time opens at 7 a.m. Remember, the London opens at 1 a.m., goes up to 5. Then there's that overlap, right? Then at 7 a.m., there's an opening of what time? There's opening of New York. So let me just write it here so that I can save on you guys, because I'm sure you want to know this thing. Right here, Asian session opens 8 p.m. 8. I don't know which symbol I'll use, right? But I'll just use this one. 8 p.m. to what time? It goes up to midnight. Midnight, that's just 12. So I don't know if it's 12 a.m. or something. Yeah, I'll just say midnight. Yeah, I don't want to be midnight. I hope you understand the language. Midnight. How do I write that? Midnight. You need to go back to school, man. Don't know if that's the correct spelling. Then London session opens at London sessions, it opens at 1 a.m. to 5 a.m. 5 a.m. Then New York session, right? New York session. New York session opens at what time? 7, right? 7 a.m. to, yeah, 2 with 2 to 10 a.m. specifically, but sometimes it extends. These are the time frames you need to know if you want to be profitable. You want to start trading to make money, you need to understand these sessions thing. The moment you fail to understand this one, I'm telling you, my friend, yeah, sometime it will take time. It will take time, but the easiest way is to understand, because during the opening, that's when the volume comes in. So once this session is here, let me give it a title. Sessions. Killer zone. I want to use the capital letters. Killer zone sessions. Give me, if I'm taking a lot of time, guys, sessions there. Okay. So I'll take a screenshot of this and I'll use it as what? Now, what is that? Where have we gone? Where's this place now? Download. Good. I'll use this one as my thumbnail. So let's go back here. I'm going to explain this entry I took on. The entry I took on GU. Let's come here. During the New York. Right now, I have you can on your chart you can look for this indicator called killer zone. It only identifies the Asian range, but if you want something else, you can look for. There's so many indicators. So there's this other indicator here. I'll talk about it some other time. So it only identified the Asian level. So you can see during the Asian, this low was taken out and the price rallies to the upside. So the opening of the London session, I've said that the London sessions open at what time? We say that the London session opens at 1 a.m. Where's 1 a.m.? Market must take out liquidity for it to buy. Look for 1 a.m. Just look on time here. Let's see, where's 1? These two. Everything here. This is the opening of the London session, and you can see price rallies to the upside and returns and takes out this low. All right. To take out this low, so that's where you could buy here. But I was not in this trade, so even in my mind, I don't know where I thought that I was buying, but I was selling, so I lost. Then during this time here, you see here, this is where I got my next trade. Remember, London went up. I was not involved in that trade, so the next trade I was able to catch was during the New York. By only understanding time, I could see this was the move that was being sustained, and I could look at these levels here. This as the buy stops, or we call them the sell stops. This level, point of liquidity, that's the liquidity for sellers. Everybody was selling here, they put their stop loss here. And again, these levels here. Isn't that? That's just the highs. I always look, I don't trade it with the any zone from the left. I don't look for a zone, you know, like where you have a zone and you extend to the right and you want to see the market react there. I don't do that because the market does not move like that. They give you a reaction, but most of the time it fails. So you can see I knew this was the levels I'm targeting. So when I open my chart, I looked at the opening of the New York session, which is 1 a.m. So look at this level. If you check down here, you'll see time. So you can see, I want you to show you this 5, the closing of the London session, 5 a.m. Then if I want to look for 7, where's 7? There. You see this 7. 7, if you look on time, this 7. The price is still bullish and up here there's some liquidity. So when I saw the price retracing back, remember, this is a down close candle, which is an order block, right? That was reason number 1, which will act as what? I look at it as a resistant, a support force to hold the price to the upside. That's how I do things. Hold the price. I don't want to see the price breaking below this order block. That's rule number 1. This, you remember, this is our time. Number 2, I want to see the price grabbing liquidity. If I move a little bit, you'll see the grab of liquidity here. You see, once I saw that grab of liquidity here, and I knew that this was 7 a.m., which is the opening of the New York session. Volume will start coming in. You can see the power of the candles here. I did drop to a 3 minutes time frame to check for stronger confirmation. Where's it? Here. Are you seeing here? We can see graph of liquidity. So allow me to remove this one because you already know what I'm doing. Price, remember this is my support, but I want to see a confirmation in the lower time frame. I saw the price leaving the zone. I narrowed to 1 minute time frame. Remember, all these informations, you only needed them on your lower time frame. I saw this. So from here, we can see the change of character, right? Change of character. Then also, when I saw the change of character, what I needed, I remember, the all of this move. This one is just an order flow or an order block here. I wanted to see the price come back there. And in addition, I also wanted to see an imbalance. If you check here, you can just squeeze this one. You can see this is my fair value gap there. Price come here, and having that level, damn it, yeah, I took that trade. Jumped in, placed my entry here. No, I was late a little bit. The price was around this zone when I took the buy, around that zone. But I knew that this level is protected. I just pulled my stop loss down here, and I was targeting this level around here. And that was not a blind target. I'll show you a level on a higher time frame, I was targeting an imbalance area. Where's that imbalance? If I open up a little bit on this chart, just a little bit, yeah, a little bit. Allow me to do that. I know the chart is not clean right now, but you can see between this candle and this one, there's a space here. This is the imbalance that I happen to target. If I push it to the right, you'll see this one here. So if you go back to the 15 minutes, I want you to see where my trades, see, that's where I was targeting. And that was a good trade because already in the morning I had lost some money because I was kind of, I don't know. But at least I was able to catch this move. At least 30 pips was not bad for me. So you can see the entry where I took the entry. And those were in my private community. And in fact, I shared this trade, yeah? This setup I shared in the community. And I'm sure all of you can go back there and check in my Telegram. My stop was down here. Then I took that trade. So let's go back to where the trade is. And you see that. Open here. This is where I traded the pair. I'm sure you can see this. Are you seeing this? I took that. Price came here. I took the trade. If I take you back to the lower time frame, I've already explained. I don't want to repeat, but just to show you that whatever I'm saying is there. Are you seeing? I have told you that I chased the trade, but I knew that this was protected, so I placed my stop down here. This was just a change of character. This was an order block. Then this one is filled again, so I was comfortable to take that buy. And also, I wanted to add a new trade. While the trade was progressing, I identified these levels in imbalance and the price is bullish, expected to support the price to the upside there. So I took again a small buy in the lower time frame, but right now I've closed. So if I drop on the lower time frame, here again, I'll show you another entry here. The guy asked me about the entry model. I hope now I'm answering your question. Look at this level, 1 minute time frame. We can see change of character, right? Then was the imbalance. We did not have imbalance on this leg, but there was something. I'll show you. There was an imbalance. Imbalance is always there. Between this candle, remember, this candle grabbed liquidity here and here. There was that. What we call imbalance. Then I measured between this swing low and this swing high. Price came to my premium zone. And where's my order block? My last down close candle was here. Extend it to the future there. So this was another awesome, nice trade. Took that buy there. Target again the same level. Yeah. Actually, I was targeting something from this area, this imbalance. If you check well. Yeah, right. So my trade, I was targeting here. I did not want to go up there. I took this one. You can see risk reward 10. And that's how I was able to catch this trade. So guys, let's catch up on the next video. Make sure that you subscribe, drop your comment. If you're interested, join our Telegram community. The link is in the description section. And let's keep winning. Yeah. 2024, we must get our first car.